Hey, Grand Rapids, did you know home prices are up 13% year over year? Well, they are. Welcome to the Grand Rapids, Michigan, Kent County residential real estate market update with data through September 2022. My name is Rodney Constable. I'm a realtor with 616 Realty in Grand Rapids, Michigan. Year over year, home prices are up 13.3% in the Grand Rapids area, with the average home selling for $352,156. 1 year ago, the average home was selling for $310,908. For years, I've heard people saying things like home prices can't continue to go up. Well, when I hear things like that, I think about the input costs to building a home. And some of the major input costs to building a home are land, labor, materials, and regulatory costs. So if somebody thinks that home prices cannot continue to rise in the future, what they're basically saying is that land is going to get cheaper and more plentiful. Labor is going to get cheaper and more plentiful. Materials are going to get cheaper and more plentiful. And the government's going to make regulatory costs of building a house cheaper and easier. And guys, when we just think about these four input costs, land, labor, materials, and regulatory costs, do we really think that any of these input costs to building a home are going to fall in the future? I doubt it. So if land, labor, materials, and regulatory costs are going to continue to go up, then home prices probably will continue to rise in the future as well. The average home is selling after being on the market for just 17 days. When we compare that to the inventory of unsold homes, we can see that those homes have been on the market for an average of 58 days. What these two data points tell us is that if a home is properly priced, it will sell in a relatively short period of time, right now in just over 2 weeks. However, if a home is not properly priced for its location, condition, and amenities, it will stay on the market for an extended period of time, right now just under 2 months. Next, let's take a look at year-to-date new listings versus the same period 1 year ago. So again, we are comparing the first 9 months, right, data through September, the end of September. So we're comparing the first 9 months of calendar year 2022 to the first 9 months of calendar year 2021. And in this category, we can see that year-to-date new listings are down 2.66%. When we look at this data in a numerical format, we can see that for the first 9 months of calendar year 2022, there have been 7,857 listings that have come to market in Kent County. Compare that to 2021, and what we can see is there was 8,072 listings, again, for the first 9 months of the year, that came to market in Kent County. So that means year over year, we are down 215 listings, or 2.66% versus where we were in 2021. Now, I like to look at long-run data, so let's go down to the bottom of the chart, and what we can see is that in calendar year 2016, for the first 9 months of the year, there were 9,860 listings that had come to market in Kent County, again, for the first 9 months of that year. And that means compared to where we were in 2016, we're down 2,003 listings, or 20.31% versus where we were in 2016. So there's a lot less homes that have come to market this year compared to where we were in 2016. That means fewer choices for buyers, right? So, and then when we look at the trends, right, instead of just looking at 2 years, let's start at the bottom of the chart and work our way up. And we can see that in 2016, again, with 9,860 listings, as we move our way up, 9,437 in 2017, and then we had a similar number in 2019, right? But there was a drop-off in 2018, and then even in 2020 with COVID, we had 8,454 new listings for the first 9 months of the year, and then it dropped off in 2021 and again dropped off in 2022, right? So I hope you guys see what's happening. There's a trend of fewer and fewer listings coming to market in Kent County year over year as we move forward, and this is one of many reasons why home prices continue to rise in the Grand Rapids area. Next, let's take a look at year-to-date closed transactions versus the same period 1 year ago. So again, we just looked at listings, so now we're going to look at closed transactions, those that actually closed The keys were handed over, done deal. In this category, we are down 8.10% versus where we were last year. Now, when we take a look at this data in a numerical format, we can see that for the first 9 months of calendar year 2022, there were 6,334 closed transactions in Kent County compared to 6,892 in calendar year 2021. This means we're down 558 closed transactions, or 8.10% versus last year. And again, when we go down to 2016, we can see that we're 7,652 closed transactions for the first 9 months of the year. This means for calendar year 2022, there have been 1,318 fewer closed transactions in Kent County for the first 9 months of the year than what we saw in 2016. That is a 17.22% differential. Guys, that is a big difference, okay? So again, anybody that, is thinking about getting into real estate, this is one of the things, right? And I want you to just really think about this, because there is nothing easy about this job, guys. And this is also a point where people, well, the housing market's slowing down. Well, what they're referring to, right? Because home prices continue to rise in the Grand Rapids area, right? Even though interest rates are up compared to where they were over the last few years. But this is the data point that people are looking at, is there's fewer and fewer homes selling. It's not that home prices are falling in the Grand Rapids area. There is a slowdown in the real estate, in the number of real estate transactions, right, in the real estate business. And so you think about this from a business perspective, there's fewer sales for the agents, there's fewer sales for the real estate brokers, fewer sales for the loan officers and the lending companies and the title companies and the inspectors or anybody else that's involved with a real estate transaction. All right. So before we move off of this slide, let's go down to 2016, work our way up, and again, take a look at the trend. And we can see year over year that the numbers have been falling and falling and falling. And in 2020 with COVID, right, we were locked down, couldn't do a lot of real estate business. There was still 6,716 closed transactions in 2020, and that ticked up a little bit to 6,892 in 2021. But again, you look at 6,334, the number of closed transactions for calendar year 2022 so far, and it's by far the lowest number that we have seen in the last 7 years. Okay, so this is a trend, right? Fewer closed transactions, fewer listings, and it just speaks to how tight this real estate market really is, guys. All right, so let's move on to the average months of inventory in Kent County. And as we can see here, there's more data in this category. I have more data available to me, so I put it in the presentation. The other slides, the other areas, I only have that last 7 years of data, but here I have a full decade of data. So what we're looking at here is if you took all of the houses that were listed in Kent County at present and then looked at the average sell rate, right, how long it takes to sell a house, that gives us the average months of inventory. All right, so right now for calendar year 2022, we're running 0.7 months of inventory. That's about 21 plus or minus days. All right, when we compare that to 2021, we are up a little bit, right? We were at 0.6 months of inventory in 2021. That means we only had 18 days of inventory. So again, to put a little bit of more meat on the bone so you guys really understand this, this means if no new homes, right, we just stop listing homes in the Kent County area based on our current sell rate, we would be completely sold out of homes in 21 days, all right, in Kent County, if we didn't list any more homes right now. So that's what that data means. Now, when we go down this chart, we can see that the highest inventory level that we have had over the last decade in Kent County was back in 2014 at 2.3 months of inventory. And guys, that is super low inventory, all right? So we're running about less than a third of that right now at 0.7 months. Last year, we had a quarter of that at 0.6, right? And again, even 2.3 months of inventory, as you'll see in the next over the next couple of minutes, is super low inventory. But for calendar year 2022, right now, we're running 0.7 months of inventory. So why does inventory matter? Well, as we can see here, if you have between 1 and 2 months of inventory, you probably are going to experience double-digit price appreciation on homes. And that is exactly what we have seen for many years here in the Grand Rapids area. If you're running between 3 and 4 months of inventory, you would generally experience single-digit price appreciation. If the inventory built to where you had between 5 and 6 months of inventory, this is more of a normal, balanced, or neutral market where you might experience some price appreciation, but it would more than likely be in the low single digits. And if you're under 5 to 6 months of inventory, this is considered a seller's market. And that's exactly what we have seen for many years here in Grand Rapids. If you're over 6 months of inventory, this is considered a buyer's market. And if your inventory built to between 7 and 8 months, that's when you would most likely experience single-digit price depreciation. And then if the inventory built to 9 months plus, that's when you would likely see double-digit price depreciation. So 7 to 8 months of inventory, single-digit price depreciation, 9 months plus, that's when we start to get into double-digit price depreciation. Are you looking for a realtor you can trust? If so, look no further. When you are ready, let me put my decades of sales and business experience to work for you. Call me directly at 616-258-4782 to discuss your situation or to just talk about real estate. I look forward to helping you succeed. Once again, that phone number is 616-258-4782.